The broadcast is now starting. All attendees are in listen-only mode.
All right, good morning, everybody. Good morning, good morning. This is Disruptive Traders TV, November 20th, 2019, Power 62, all things 62. I'm Todd Groskreutz. I will answer your questions today, be your host. Thanks for stopping by. Good morning. All right. Good things, good things. All right, let's get this out of the way, get everybody warmed up. And I got some good people on here. I'll get some good questions. All right, risk warning and trading disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors or traders. There are no guarantees of profit, and most Forex traders lose money trading. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts or uncertainties. This presentation and all of its content, including past trades and potential trade setups, is for educational and informational purposes only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantees of profit of any kind. The presenter is not a licensed financial professional and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting, and acting upon any information in this presentation. This is not a solicitation to invest. Hypothetical performance results may have inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. All right, I think most people here have been here before, but if you want to get a screenshot of this, now is the time. I know it's exciting stuff. Here's our schedule. I think I've got the right one. We're on Wednesday in the U.S. Got McKinsey later today with beginning pitchforks. And then Clay Waves in the evening with advanced waveology. He did intermediate waveology last night. Probably the understanding of this right here is the key to tab 29. Once you understand that and master FOMO, you'll be on your way. So we're right here, 6 a.m. Eastern in the U.S. Recordings of sessions are posted, so if there's waveology sessions you want to go through, this one didn't happen this week. If you want to go through, go back to the sessions, check them out, as well as this Power 62 sessions. So. All right, let's see here. All right, so we got Power 62. Got some people in here that usually bring questions. Hopefully we got some good ones today. So questions, Power 62. So we've got 62 EMA on time period, right? Includes a 513/62 cross. Includes harmonic targets. As well as other realities with the 62. All right, let's see what we got here. Is it okay to trade 5-minute Power 62 standalone with tab 29 Waveology, or should we use pitchforks with it? It's a really good question. So tab 29 was always intended to be an ultimate confirmation. So I don't want to say the more confirmations we have, the better, because we can get bogged down in that at times. But if you're looking at a 62 bounce, so if price crosses, 13 crosses, price crosses, ahead of that, comes back, pass and checks it, that bounce is a strong move. Whether you're on a 5-minute time period, 15-minute time period, 30-minute time period, definitely a strong indication. If you have a pitchfork or a trend line there, even better. But a lot of times you won't have a trend line there because you've moved up from the bottom, and that pack move might be the second bounce on a trend line. Sometimes a pitchfork will catch that, but taking that 62 bounce is a strong move. A lot of times you'll find a Fibbo there on that pullback. That's probably your most consistent support and resistance. The other thing you can catch there is an INS line. So you create an energy point with that 62. So if it's pulling back to the 62 and taking off, whether it be a 1 minute, 5 minute after that 5-minute cross, that's strong enough for me, because your risk versus your reward is pretty low there. So your reward risk can be pretty high. So hopefully that helps. What suite of EMA indicators do you normally use in TradingView? I use the HTATF, Steve's indicator, on each time period. And then sometimes on the 5, I'll just put in a 1. Oh, let's see, the 15 is 186, and then a 10, which is 124. And I just toggle them on and off. So if price is pulling past that 5-minute, I want to see why. So, but the HTATF works really good. The question you posted in the group recently, Ben, or last week? I did not see it. Second here. A few hours ago. Yeah, I didn't check the groups this morning. Hold on one second. All right, let's see. Just reading this question online. Hold on one second. All right, so that's a great question, actually, and I can address that. I've got a chart that I can take a look at on that. Do you always wait for the bounce, or can you enter on candle close after the cross? The thing is with candle close after the cross is by the time you get the cross, you might be 5 pips, 7 pips, 10 pips above the 62 on that time period. My goal is to let price pull back to the time period, 62, and enter there because we know price likes to check that. Now, there are times, yes, it's just going to take off and keep rolling, especially on a 30-minute. But if we let it pull back and check it, we're in at the zero spot, if you will. Allows us to get in with a 3-pip stop loss, 3 to 4 pip stop loss, and know that if price continues on, that we have a small stop, which allows us to get a larger return per pip. And we don't need to cover, because if we entered once price crossed, or once we got the cross, if we entered at price there, if we're 5, 6 pips above the 62, technically we need to cover that 62 at the bottom. So at least that's what I would feel. And you're using your waveology at that point as well, because when it pulls back to the 62, there's going to be harmonic wave convergence there, whether it's a 5-minute or just a 1-minute extreme. You're trading where you know that you should get a burst move out of there. Let's pull this chart over here because I was looking at this earlier. I'll trade the 62 bounce without an energy point myself. I mean, that's trader's choice. Sometimes it will be just a little bit short. Sometimes it will be a little bit long. It comes through the 62. It's a little bit short of the 62. So the CAD was a good case study, in my opinion. I was looking at this where price had been moving down the last couple days. This is the 30-minute chart here. We can see the 4-hour went all the way to extreme for those tab 29 traders. For the shredder traders in here, which there's quite a few, it was disproportional. The last time the 4-hour was that low, it was way lower. It was way down here. So disproportionality telling us that more than likely we're going to make a higher high from somewhere in here. It's a 4-hour end, so it can be a little trickier on where that end is, right? But once we start breaking up, especially once we get this cross, we're saying, hey, we want to get up here. We want to make a higher high. So this is an example where we got a 1362 cross on the 30-minute, and it never did come back and check the 30-minute. This is during the trading day yesterday, New York session. Actually, let's take a quick peek at the waves. A little bit of waveology today too, but we can see we came out of, we were here, actually pulled up divergent twice. As Steve would say, that can't persist, where the wave keeps lifting but price keeps pushing down, right? There's a little bit of a news event in here, I believe. Wasn't red folder, but it was enough to push that move down and the Elliott wave cycle, and then we went up from there. So as we start to move up, whoops. Yeah, we got a little bit of slight divergence here on the 5-minute. 10-minute pulls all the way down. So this entry right here, is going to be a 10-minute harmonic wave, a 10-1 harmonic wave convergence, 30 not an influence. So if you're working on your 10-1 trades, this is one of them. From here, price pulls up, we get the cross. And here we're coming back and tagging the 1 minute. And if you were on last week's session, we were talking about this exact move where the 10 comes in, the 5 comes in, 30's coming in hot, 4 hours moving up at this point, pulls back. This is a Bollinger Band hit. This would be a peak 1 extreme right here at 10:30. Dun, 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 dun. It's right here. So here, we made a 10-minute. We're pulling down. But then, so I'm not a big fan. If you're trading just pieces of 10, right? Then we pull up, we come back down. That's a nice little trade there because you made a higher high, but you came back and made another extreme. Got 5-bit channels here. So you got a little piece in there. Whoops. Actually, a little piece right here. Price pulls down again. Does the same exact thing where you've got basically a fan retrace. Pulls up, comes down. In real time, this was extreme. It hit the extreme. Again, a higher low there. You got another piece here. So to answer the question, we crossed here, right? And so I'm trying to get in this move. The fact that it doesn't pull back all the way to the 5 is just telling me it's a strong move. It's starting to open up. But if it pulls down, you could potentially take that. But if you wait for the next one, that next peak 1 extreme, again, assuming in real time, which I was there in real time yesterday on this pair, it tags the extreme, pulls out, and it's a higher low. So qualified POT, and we're in that trade. Now, Steve talks about he only takes trades he knows he's going to win. This is an example of that. And I think that's one of the keys. We all know when we first start out, especially when we first get tab 29, we're like, wow, those trend bars are green. Let's go. They're red. Let's sell. But it's really breaking the market down into areas that with waveology, with the support and resistance, we know what's going on. Tab 29, ultimate confirmation tool. Here, what are we looking at? We're looking at a 5-minute cross. We know it's going to pull up. It's going to come back and check one of these 2 lines eventually, usually sooner than later. Okay, great. Let's use tab 29 to get us into that, but also get us into a spot where we don't have to worry, wonder, etc. 30 minutes on the move up. By the time you take this trade, 30 minutes snaking. Pretty small area of snaking, right? But it's on the move up. That's the important part. We've taken a trade that we know that this has established a bottom because we know this has a potential to do an ABC on us, right? But we know this has established a bottom because it pulls up and it makes a higher low. So our probability of win here is higher than it is here by using tab 29 to tell us that. Plus, by the time you enter here, the 10-minute is starting to pull back up, reloaded waves, so it would be a little bit different in real time. So we use the 1 minute 62 and a POT entry to get us into this spot right here. Now this was 1632, loose 1931. There's 12 pips there, 10, 12 pips in that move. But it's a spot that we know where we're at. We know that 30 minutes snaking. We know very, very high probability that price is going to go higher. So how do we get into that spot? You know, same with this 10-1 here, but we have even more data here because we know we've crossed. We know we're separating. We know we're bouncing off the 1. We're trading off the 1, so you know, we've got a decent hard bottom there, if you will. Yeah, this thing was, I mean, it was ripe with tells, if you will, that here's another good indication. Didn't quite make a solid trend line there, but these 5 minutes can't keep pulling back further. The 30-minute didn't move, right? It's pretty much solid. It pulled down just a little bit, but these were pulling down and price was going up. That can't continue to happen. And over time, you'll learn that, you'll see that, you'll spot that. 5 minute divergence it's a great tell because you can usually enter it tight enough, you know, there's not that slush in there, where when you see 30-minute divergence, you're like, oh yeah, that's cool, but you need to drill down to really, you know, find that entry. But, you know, Tim Packus was on today, he pointed out, yeah, you know, we're here, 5 minute divergence. Price pulled up from this point. So now the kicker on this is, you know, what is your money management? You could POT trade that trade I pointed out, make 10 pips. But if we look at that trade, it was right here, right in here. It was right here, actually. From entry, 19, let's say you got in at 21, it never came back to 21. You're in green harmonic targets on the 30-minute. It did. This was the shredder band 21 here. I think it was here. Yeah, it was here. It did bounce off of it. My mistake. I was anticipating a move back to the 62 and taking off, which never happened. That's why you don't want to anticipate what price is going to do. My point being is, if you said, hey, once I get in a 5 minute trade, and if I'm going to run this money management, I like to enter at the 5 minute 62. But you could say I'll exit on close outside of the, you know, on the other side of the 62. You could have ran that all the way to here, which is an entry point again for another trade. So back to the original question. As we move up this chain, and this is Ben's question that he posted in the group, is, okay, yesterday we had a cross, but we haven't crossed again since. So if we're wanting to enter a trade in this progression, how do we do that, or what do we want to look for? Once I cross here, either I'm doing pieces of 10 in here, like kind of like this trade here, how I showed you, you get a pullback. You know, we had 1, 2, 3, 4, 10-1 convergences. And again, this is Steve says in trainings, OCRs, you'll learn which ones to take. These are the ones to take. Price pulls back, goes up. Price pulls back, goes up. Price pulls back, goes up. So you start to learn what the impulsive side is. Harmonic targets are green. If we look here, if we've studied disproportionality at all, we can see that we've pulled back 60% and prices barely pulled back 15%, not even. So we know that this has a strong probability of a good move out, or at the very least making a higher high. So again, it's setting yourself up for knowing where you are, what price is doing relative to the waveology, the importance of the waveology, so you can use your method of stepping into that trade, whatever that method may be. You know, by the time we get up here, by the time we made that crown, we can see the 4 hours in a snake, and the 30 minutes just kind of pulling out and bumping back against it. So these moves here on the 5, once we get past this initial, on this first pass and check, I'm looking to get in here, especially with this little pattern right here. I'm looking to make an entry here. But once I get past that, either it's straight pieces of 10 with impulsivity. I'm looking for buys here generally, unless I had some massive pull up and it looked, you know, I'm not looking to sell a harmonic wave convergence, put it that way. Not anything higher than a 1 minute. But I can take these 10 ones, especially if it's against a snake, like this one right here. I mean, that's a buy into the sell all day long. This one technically is, if you know how to read disproportionality. This one ended up being pretty much right at the 62. So they're good trades. I mean, we're 10 pip scale here. Just so I could sneak it on the chart. So as I move up, I'm not looking for short pullbacks, you know, in the 5 minute wave. I'm looking for it to prove itself that, hey, this is the end of a pullback. And that's what, you know, the 10 minute wave is generally designed to do. Or at least give us enough movement out of a 10 minute this way, enough pip movement that we can get in and get out even if it wasn't the right time to be in. So hopefully that helps. Dun, 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 dun. Divergence on the 5. Don't necessarily, so question was, so 30 minute 1362 cross, then drop to the 5 minute and look for a bounce. Not necessarily. You'll get 5 minute crosses inside of 30 minute moves. This one doesn't happen to have one. But an example would be right here where we didn't cross up, but there was a 5 minute cross up and then a pull back down. It was the 18th at 8:30. So right here, price pulled up, didn't cross, pulled up again, which I love to see when it pulls back to the 62 twice. And then from there it takes off. As we can see, This would have been a 10-1 trade with 30-minute not an influence. Actually did a nice little slingshot here. 1-2 move, then took off from there. This one a little bit trickier on getting. If you waited for the cross here, a little bit trickier on getting an entry in here. Your first real entry wasn't until this point right here. We'd be bouncing off the 1 minute. That move out was just that impulsive, basically. Let's see here. Hold on one second. Mention the UJ. Let's take a look at that. All right. So they were talking right in this time period here. It's not really doing too much. It's just kind of hanging out. Got an 8-hour snake. Yeah, I'm not really excited about this just because it's not really going anywhere. We came off of this basically 30-minute retraced extreme, right? It pulled back to extreme, hit this 30-minute 62 against a 4-hour, 8-hour snake. So here, we're looking for it generally to return, not always, but it's just, again, this is where tab 29 is relative, right? It's a relative indicator. We don't have 57, 20 pips of movement, and this 30-minute moved all the way across the channel. So this is that pattern that we were looking at last week where the 5 comes down, the 10 comes up, or down as well. 30's rolling in, 5 pulls back. It's a clayway trade technically, right? 30's has not made extreme yet. So based on, the criteria we were talking last week, there's more than likely an entry in there. Let's look at the 1-minute chart. Not huge candles, kind of wicky, a lot of wicky. I still haven't gotten used to that. Those that use TradingView for a while. All right, so that's right in here. So this is one of those tricky spots, right? Because you basically make a clayway here, you pull out, make a few candles, and you come back up. But it's just one that, it wasn't destined to keep going. If you're doing that first entry, pieces of 10, POT trading, you could be in this and exit at slush. You could be in this and make, grab a few pips there. It just didn't go. even if you're in this and you're saying, okay, I'm going to protect myself with the 1 minute 62, same way, slush and slush. They don't all go. Now we can see it's just in a consolidation. 30 minutes in, right, smack dab on the 50. So it's just, it's the pair itself is not moving. This is great waveology here, right? There's times where that means 50 pips, running into an 8-hour snake. So there was potential there. But it just didn't, that's the way the cookie crumbles. Yeah, that's the first thing I saw when I opened it up. The chart is like, hey, that looks like a decent wedge there. So it's going to go. And it may be, there's FOMC minutes that today, later in the U.S., might hold things up a little bit. Just not a big news week, which is, I like a little bit of news in the morning just to get pairs rolling, get them set up, get them trending in one way or another. So we can see how the 30s trying to move out here. But it gets hard, when it's this compact, it gets hard to know exactly what's going on there. That's one where you took a shot and basically it, turned around and goes the other way. That's where your money management protect and preserve. Yeah, exactly. One where when we look at this, whether it be ending diagonal, whatever we got going on there, it's just not a real strong trend, right? Although we did go all the way down to the 34 and then back to, that's probably the best part I like about this is that we tagged this and then we went back and tagged the 62 at here with this and down here. As this sets up, yeah, that excites me. And actually the move away from there was the strongest. And then we kind of consolidated after that. So that's where the 5-minute cross, if you will, a lot of times is, you're giving up the one wave of that move, if you will, or the beginning of that move. Because the 5-minute cross, a lot of times it's part of a 30-minute move. This move happened here, which caused the cross. And then eventually we did pull back to a 62, 5-minute 62 hit at a 10-1 convergence, 5-minute harmonic wave convergence. So again, but hard to tell, that reloaded waves here, but looks more so like this was a soft convergence. Price just kind of making it, 30's kind of working its way up. Percentages would say that that'll break down, but we shall see. All right, any other questions? Good questions so far today. Good group. Okay, this is a really good question, and it's a tab 29 question, but most of us in here are tab 29 traders. It says, when people reference tab 29 being a relative indicator, I've never been truly sure what that means. So what it means is it's tab 29 is tops, what it actually stands for, right? Tops, and bottoms. So it measures the top of the trend and the bottom of the trend. And sometimes the top of the trend is a 50 pip move, and sometimes it's a 8 pip move on the same time frame. So it's relative, or it's measuring it on that time frame, right? And we'll go to the 30-minute chart here, because let me turn the HTs off just to save our eyes a little bit. I think we'll be able to find a good example here. All right. So right here, we had a 30-minute top. Let's call it 132.20. And it went all the way to the 30-minute bottom in about 15 pips. So that's a top and a bottom. And then technically, this bottom here is right here, which as a tab 29 trader, we know that was a harmonic wave convergence. Again, it was kind of news aided, but it went from here to a top, which let's say it's right in here. So we're at 35 and we were at 90. So let's say that's 40 pips, just to round off instead of 45. So this top and bottom was 15. This top and bottom was 40. And then a 50% slice of this was basically 25 to 75. So this little slice was, let's say 50 pips, again, just to be in general. So a lot of it depends on how is the pair moving, et cetera, et cetera. So this was only 15 pips, but this was 50, and this was 45. So price is moving well here, about the same gate, right? These two are fairly close relative to each other. Not that you want to compare the two, but we just know that the indicator is telling us, hey, this is the 30-minute bottom at this time. This is the 30-minute top. So we can't look at this and say, oh, no, if I took this and made a stick out of it, a relative wave that length is going to be 15 pips. That's not the case. And we can see as this winds up, the waves are getting shorter, but price isn't necessarily getting shorter. It's staying pretty much relative to the way this move was. So. Yeah, hold on one second. Does that make sense? Okay. I've never had to explain that one, so. Apparently my understanding makes sense to me, so I just want to make sure it made sense to you. You said you put a fresh one in there, Ben? Okay, let me read. Got another question that Ben had put in the Facebook group. So I did answer that in an in-between way. About I didn't call it out directly, but as we get across, especially in, this is a good example here, as we have across in this, first move we get into or we don't, where do I feel comfortable re-entering? And either I'm doing straight pieces of 10, which there's many entries in here, obviously, or I'm looking for a 10-1, basically a buy into the sell, a 10-1 buy at that point. Especially here, because I'm above that 5 minute the whole time, right? So I'm looking to bounce off of it. And what I didn't point out, and it's this whole time the calculation for the 5 minute 62 is fairly close to the 13 EMA. So it's almost like a 30-minute haul, if you will. And if you look, I pointed at it, probably won't do much good, but with my finger, we've been above the 13-minute 62 this whole time since we crossed yesterday. So I'm looking for those 10-minute bottoms as my indication of, hey, I want to try to jump back in this move. So I'm not going to pull that chart up directly, just kind of wiki. If people want to go to the group, they can. But that's the answer to your question, essentially. So when it's not the first pullback after a 5 minute cross, I'm looking for either a straight POT trade, which at that point I'm trading it as POT, or a 10-1 harmonic wave convergence. I mean, the real power of tab 29, right, was, and I've mentioned this in previous sessions, is this trade right here that I was talking about, or even this trade right here that I was talking about, that is at 132.19. This got you still in, you could still theoretically be in this trade 100 pips later. It just depends on what your money management is. That's -3 versus 100. And if you've went through tab 29 and you saw the video where Steve talks about, I think it's module 7, about an hour in or about an hour in, he talks about that is the power. That's the reason it was designed originally, was to get a tight entry. And I know he spends a fair amount of time on POT and how you can take small chunks over and over and over. Yes, obviously you can. It's just a matter of, it's trader's choice, right? But that entry here, we know we've crossed. You could even be in on this 4-hour bottom. That was the real intent, was to trade a 4-hour bottom, 513, 62 cross, and just ride the harmonic targets up. Yeah, we haven't had enough pullback to violate any of the, at the one, you're at the 89, so you would be at 34. Your stop loss would be right there if you were on the 62 money map. You get to the 110, it moves up to the 72. So you'd move up, but at 48, you'd be 25 pips locked in, 30 pips locked in from where I entered, and no pressure. Just just run it like a robot, like an EA. I think as traders, we get so caught up in the tick of every candle, and there are other ways to to fight that battle if we choose. So, and a lot of it just, it goes back again, mentioned earlier, is knowing with the waveology what the market is actually doing. And there are certain points in there that we can confirm that fairly definitely, 85-15 anyway, in our favor. So, but when you come across this, the 30 minutes solid, and you've got a div 5, right? Divergent 5 there, and the 10 pulled back at 0440, that'll be, should be a 10-1, soft 10-1. There, you can first jump in right here. Nice little trade. Yes, very. Okay, let me see. I didn't see the first part of your question, Mac. I mean, if 30 minutes divergence, do I draw it on my chart? Or am I just eyeballing the divergence while trading, then going back and showing your work? Not so much on the 30-minute chart as an entry point, just so where you can see it clearly. Yeah, I generally don't trade 30-minute divergence. I don't even usually put lines on it, just because I will note it in my head, but too much slush for what, if I'm trading, bounces off a 5-minute EMA. The 5-minute divergence is the one to me that is important to me, and or maybe a 10-minute. But it will happen on the 30-minute, obviously, and can tell us, can give us some information about what's actually going on. But I'm more keen on, and again, it's just my style of trading, if you will, is even if I was looking to go long, yeah, I'm looking at, how is the 30 working with the, if I was looking on this trade to say, hey, I'm going to get in, I'm seeing this cross, and from here to here, the 40's pulling up, in this 30-minute pulling back like this is the same as that 5-minute look that we were having. But see, that didn't happen till up here. So I'm like, okay, let's get in this area here and ride this 4-hour up if I was inclined to do that. So as long as this 4 hours moving up, I know the 30 is going to be cycling at that point. But to get into in this area here, I'm drilling down and using that 5-minute cross to do it. To me, and every trader's different as far as, where they want to quote unquote step into a move. But to me, it's proven itself, okay, it's got enough momentum up. It's made that cross. The waves are still, the 30 minutes coming strong. Waves are still confirming that action. So, let me find my spot that I'm going to step into that. And then depending on what I'm, what my money management is from there. I mean, think about it. If you said, okay, I'm stepping in here. I'll assume this risk short term. Or even, let's say, a lot of times you'll get where the 1 is real close to the 5, maybe 2 pips difference. So you can, even if you don't tag the 5, you can still cover the 5 easily. And you say, I'll exit when it goes through the 5-minute and closes. So you exit at 76 and you're in at 16. And from here to here, you didn't really have to think at all. You get a little close here, but Other than that, it's just doing its thing, doing its thing. The 5 and the 13, or the 5 and the 60 minute are separating, which is awesome. And then again from here, it's basically another entry. Take profit, go again. But if you choose to do this method, there are a lot of times where you're going to get, +3, +5. You're going to be +17, and you're going to get +5. You can put a 40% on this. That's the way Steve has said it, has advocated as well. But I would say, get to a good solid 30-minute convergence before you put that 40% on, because then you've worked your way up. You're going to have some type of retrace. So the money management model or module in tab 29 is pretty good. Rewatch it. It's depending on where your head is at and what you trade, you'll see different things in there. Little different things Steve says under his breath. Those are the important things. Yeah. Could this be a valid buy into the sell happening right now? Yeah, it's pulling, the 30's starting to pull out a little bit. It's still above 80. Price hasn't pulled back very far, but it is that time of day. I don't know how close you guys follow the Loney, the CAD, but it likes to be a buy during the New York session. So usually around 6:30. Time to do it yesterday. 6:30, 6:20. It likes to. It'll make a pull down and then likes to go long. The dollar seems to be strong at the beginning of the session. So not always. I mean, it's made a pretty good run up. It's about due for, what do we got? I don't think I have the 34 on. It's at the 55 up right now. Which is a lot of times, if you got your harmonic scanner on, probably a D point right up in here. So when it's that far up, I may not take this 10-minute right off of a 10-minute harmonic wave convergence here, and wait for a pullback and wave 3. But just from a technical standpoint, until this pulls down a little bit further, yes. Snake-like properties, right? This 30-minute wave here. It's up there pretty high too. I mean, that's the thing with the Forex. Again, you need to trade what based on what the waves are doing. So if we come down here and we're bouncing that convergence, yeah, we take that trade. This looks like it's going to snake out a little bit to get there. And then you let the chips fall as they may, right? Do the same thing over and over like a robot. Same support and resistance. There was that post that Steve posted. I'll mention this and then we'll wrap up for the day. That post that Steve posted, it was just a wall of text, probably 2.5 months ago now, in Scans, Forks, Fibos, and Waveology about building RAS and volume of trades. And he talked about how taking the same trade, same support and resistance, same waves essentially, the same way with the same money management every time. See how this is dropping down now? Same money management every time is what you need to do to build. The trick is you're building belief and you're building the neural networks in your brain so it becomes a habit, so it becomes automatic until it becomes subconscious. And then you can't help but do it that way. And at that point, you're in the flow, right? You're like, oh yeah, when this happens, I do this. Good things happen. So it's filtering out, because there's a 10 pip move right here in front of us, right? Or this little, peak one hook back against a snaking 10, from here to here, and however far this goes. It's doing that same. So it's not like, oh, let me get in on this. So I took the convergence here. Pick what you want to do, that one thing that happens often enough that it suits your level of FOMO, right? And know that when you trade that trade, when you should enter, what is going to happen. And if it doesn't happen, your money management protects you from that, 85-15, right? And then you just go do that over and over. Because in all reality, the system or the tab 29, the new paradigm, let's put it that way, of trading gives us the advantage of being able to make, again, I don't throw out a trading disclaimer very often, but go back to, we'll put the disclaimer up at the end, 1% plus, right, on a trade pretty easily. And it doesn't take that many times of doing that to be, to have the exponential curve working for you, put it that way. So with that, I'll wrap up. The Trader's Mindset section in the files is a great one to watch too. I haven't watched it in a couple months. The Trader's Physiology video, it's a couple hours long, but it's good stuff. Good stuff. So I appreciate you guys for coming. Had great questions. Good group of guys, or good guys and girls, I should say. And enjoy the rest of your week. And have a good one. Bye. Oops, let me put this disclaimer up because I know you guys want to see it again here. All right, there you go. There's a disclaimer. Take a screenshot if you need it. All right. Thank you, everybody. Appreciate it. Have a good one.